name is Adam and I'm the Chief LLC Officer here at Startglobal. My job is to take the stress and worry out of your day by providing clear information on a range of subjects. Today we are looking at taxes for content creators. That's right. Unfortunately, even content creators have to do their taxes. So let's start at the beginning. Content creators might just seem as individuals having fun, creating videos, media, or even written work. But the truth is they are businesses just like many corporations across the world. But it doesn't end there. As a content creator, they have much more than just their initial selling and distribution of their creativity. They can have multiple streams of income. These could be brand sponsorships, affiliate income, course sales, and even physical products. And in some cases, some content creators cover all of these. Suddenly seems a bit more like a business, doesn't it? Most content creators set up their LLC as their legal entity, giving them legal rights and responsibilities. So today, we will mainly cover taxes for LLC. So, as the content creator is usually one person, the LLC which is set up is called a single-member LLC. The single-member LLC is a pass-through entity, aka a disregarded entity. This means that the government considers income of the LLC just like the income of the individual, which is different from corporations where income of the corporation is separate from the income of its shareholders. Basically, if the creator owns a single-member LLC, which is their content that they create and sell, then the incomes of this content and the taxes it has to pay are calculated like it is just the creator's individual taxes. Still with me? Basically, one person is running the show, so the government respects that. Nice. So, a single member's LLC's taxes are mostly the creator's individual taxes. See how I threw the word mostly in there? That's because there are always other charges which are outside income taxes. Sadly, no one can escape these. There are different authorities who charge taxes from a creator. Number one, federal taxes. These are taxes charged by the federal government through the IRS. Number two, state taxes. These are taxes charged by the state government and their own revenue departments. Obviously, this varies from creator to creator and whatever lovely place that they live. Number three, local taxes. Taxes at a county level. Again, it depends if you're a city kid or a country bumpkin. So, that's the taxes charged from a creator. Let's put on our creator hat, ooh, nice fit, and see what taxes there are for a creator. What do they have to pay for just creating awesome stuff? Number one, federal income tax. This ranges from 10% to 37% depending on how much your income is. Sorry, how much that sweet, sweet money is. Number two, state income tax. Every state has income taxes, so there's no escaping this. Unless you happen to live in Alaska, Florida, Nevada, South Dakota, Texas, Washington, and Wyoming. These states have no income tax, so happy days if you live there. Number three, self-employment tax. If you earn over $400 a year, then this has to be paid. This comes to 15.3% of your income. Not too shabby. When this is broken down, self-employment tax includes 12.4% for Social Security, this is old age, survivors and disability insurance, and then 2.9% for Medicare, this is hospital and insurance. Number four, sales and use tax. This is paid to the state and then the local governments. This is most apparent when you are selling physical goods, and the rate of this tax varies from state to state to state. So to cover all different 50 states in one video would be a bit insane, so I would recommend Googling your state, sales and use tax. Hopefully it's good news. And finally, number five, state franchise tax. Some lovely states charge a tax for just the privilege of doing business in their state. The nerve of some states. Whew! That was a lot about taxes and charges, so let's move on to something a bit lighter and more beneficial to you. Deductions! The great thing about being in control of your finances is that you can use certain purchases as business expenses and reduce your taxable income on which the tax rate is applied. You can deduct these things. Number one, freelancer and contractor payments. These could be payments for video editors, thumbnail designers, audio experts, and other creators that provide a creative service to the necessity of your content creation. Number two, software. This is a major one as it can include software packages like TubeBuddy, Artlist, and the Adobe Creative Suite, and even online platforms like Shopify and Wix that provide your selling marketplace. Number three, equipment. These are physical tools like cameras, lenses, lights, and microphones that are used when creating your content. And as these are assets, a percentage of the expense is taken as depreciation. That's what can be deducted. And number 4, your home office. If you're like me and are working in a home office, you can use a portion of your rent deducted if your home is used for recording videos. And number 5, mileage. Depending on your line of work, using your car could be deducted if it is seen as a necessity. This could be attending trade shows, conventions, or even going to meetings to see clients or potential customers. The mileage rate can vary, but at the moment, it's 54 cents per mile as of 2022. And finally, number 6, your cell phone. Again, depending on your line of work, your monthly cell phone cost could be deducted if it's used to place orders, receive orders, or for outbound sales purposes. So that's pretty cool, right? Some kickback for all that hard work you're doing. But here's the next question. When is it time to pay all these taxes and charges? For income and self-employment tax, if you are expected to owe tax of more than $1,000 a year, then you will have to pre-plan and pay your taxes quarterly throughout the year. Experts, and people like me, refer to these as estimated taxes. So paying these quarterly throughout the year means you are due to pay 4 periods: April 15th, June 15th, September 15th, and January 15th of the following year. And that is all the taxes you will have to pay as a content creator. Oh, give yourself a pat on the back. Woo-hoo-hoo. You've listened to me blabber on and you've survived to tell the tale. Hey, Adam from the future here. Have you heard about Startglobals all-in-one package? You haven't? You really should. They will manually file all your state and federal taxes on time, take care of your bookkeeping, your compliance, and even assign you a registered agent who will help you with any problems you have. Just visit the link in the description below to find out more and take away the worry and the stress so you can concentrate on running your business. Okay, I'll let past Adam on now. Before we go, it's probably worthwhile to leave you with, I don't know, an example of a content creator working out their taxes. Some rough estimations anyway, okay? Let's begin. Let's say the creator lives in Florida. Let's call them John. John earns $100,000 a year. Let's say his expenses that can be deducted from this comes to $20,000. That leaves $80,000 as taxable income for John. This means $13,216 is the federal income tax. Remember, there are various tax brackets of $80,000. And it means $12,240 is John's self-employment tax. That's 15.3% of the $80,000. John has $0 of state income tax as it's Florida, and $0 sales and use tax as he doesn't sell any physical products, meaning he has no state franchise tax. So we need to add together $13,216 and $12,240 together, which is $25,456. And then we take that away from $80,000, which means John takes home a whopping $54,544. Crikey, he's rich! Anyway, thanks for taking the time to watch this video, and I really hope it's helped you content creators out there who could be worrying about their taxes. As always, please check out our YouTube channel for more videos on LLC subjects, and subscribe to stay up to date with our new uploads. I'll see you next time. Bye.